Orange pill. Orange pill. Orange pill.
It isn't red, it isn't blue, orange pill is here for you. Brought to you by Swan Bitcoin, the only on-ramp you need to get on-ramp. And you know, I saw American Hodl was tweeting that he finally gave in to the Swan Bitcoin shilling and smash bought some Bitcoin on the recent dip because it was so easy. You get the price immediately. And it's cheaper than those other places like Coinbase or whatever. And you can take your coins off, quickly right into your private keys. Remember, not your keys, not your cheese, as Isaiah Jackson has now made that phrase famous.
Right. Yeah. SwanBitcoin.com. And I saw he said people should stop shilling it because he's done it. He's been converted. I also wanted to show, cypherpunknow.com has this amazing artwork behind us, and I guess he's sold out. He has sent us another one, and we'll have that up hopefully on the next episode. We have to get a frame for it, but he also sent us some of these t-shirts. This is for Max. He'll be wearing it next time probably. But I want to say, I wish we had scratch and sniff sort of thing, because if you could smell this now, you would be totally stoned. Like, I am getting stoned just having this nearby because it smells like marijuana. He says it's something to do with the acid or something that he uses to lay these graphics on.
We know what's going on.
Oh boy.
They're having a good time over there at the t-shirt factory.
Yeah, I think they're having a really good time there. I also found out something else, that I have been giving my shoe away for free, essentially.
What?
I learned something new this past week. In fact, I just learned it last night. There's a thing called findom. Have you heard of this?
Findom?
Fin, F-I-N, dom, D-O-M.
No.
So financial dominatrix. And so what it is like, a woman like myself will receive some money from a guy to just insult them, especially for their financial abilities. You piece of shit, poor person. Have fun staying poor, basically. People pay you to do that. So, when I think about the Orange Pill Podcast Telegram group, and I'm throwing and hurling the shoes at everybody, and some of them just keep coming back, like that incel from Brooklyn. He's coming back all the time, right? And then I realized,
He's got a fetish.
He's getting it for free, right? Normally, the reason he's probably living in his car in Brooklyn is because he wasted all his money on findom.
Yeah, definitely. Right? Look, the dominatrix is big business out there. Findom is particular dominatrix because, the thing about people in the financial business, one of the enemies of good performance is over aggrandizement, too much ego.
Yeah.
So you don't want to go into the day thinking, oh, I'm the king. I never make a mistake, because that kind of ego can hurt your performance managing money. So you have to go to the findom, that she can tell you that you're a piece of shit, that you don't deserve anything, you're garbage, and try to deflate that ego. So when you go into the office that day, you're grounded. If she needs to get into a G-string, wear stiletto heels and beat the crap out of you to get better performance that year, you make that sacrifice. That's what you got to do for your profession. That's what you do as a professional.
Right. But it also kind of explains all the headlines, all the participants, all these characters all around Bitcoin, right? Because Bitcoin acts as a sort of findom to these people. So Peter Schiff wants to be abused. That's why he keeps on coming back to Bitcoin. He's taunting Bitcoin to bitch slap him and say, have fun staying poor.
Nouriel
Roubini. Janet Yellen keeps on shouting out about Bitcoin these days.
Right, I think Roubini is a different sect of the findom world, which would be cellophane.
Cellophane?
Yeah.
What's that mean?
Cellophane is when you put cellophane over your face and the findom defecates on your face.
Okay. We don't need to
But that's
hear
a
this.
that's a subsect of this whole findom phenomenon.
Well,
Marlon Brando was into that.
okay.
From what I
but-
hear from Hello Magazine.
Okay. Well, Bitcoin has been in the news with this new administration, and straight away Biden came in and he put a 60-day moratorium on any sort of policies that were being enacted or issued, or statements and executive orders from Trump. So one thing is the Steve Mnuchin proposal for that new self-custody legislation. Well, that's on hold for at least another 60 days. So that may change. And they've already kind of changed some of their wording on that it'll just be because they were obviously going to have some problem with that, right? They weren't treating Bitcoin as equal to the rest of the financial sector. So they were asking for exchanges to report. This is under Mnuchin. They were saying that exchanges have to report any transfers of like $2,000 or $3,000. It was a lower number than the suspicious activity reports that all banks have to file whenever you do $10,000. So they're suggesting that that's what they might do, is like if you transfer $10,000, you're going to have to file a suspicious activity report. Now, the U.S. Treasury receives millions and millions of these reports every year for suspicious activity. Anything over 10,000 or close to 10,000. A lot of banks file them for like 5 or 6 or 7,000 because they don't want to get in trouble. So it's just easier for them to overwhelm the Treasury with these reports.
Yeah. That's just the paperwork is. Not only do they print lots of money, they also print lots of forms and paper and administrative and more administrative. And remember that movie Brazil, Terry Gilliam? There's a fantastic scene with Robert De Niro. He's trapped in some kind of vortex or something, and a storm of paper comes and it encircles him around, and you don't see him at all. And then the paper starts to dissipate and he disappears completely. That whole movie turns on a clerical error where his name is a fly gets caught in one of the machines and the name is misprinted. And they go after De Niro mistakenly. And that's part of the plot device there. But it shows a dystopian nightmare of having administration go wacko. And the U.S. is becoming like the Soviet Union or like leftist Europe in this sense, is that they can't produce enough bureaucracy. The bureaucracy in the U.S. is going hellaciously to the frickin' extremes. And that's how you kill a country. That's how you kill an economy. And the people in big, when I heard this Mnuchin thing, like I went over all these exchanges and apps where I had a few Bitcoin here, a few Bitcoin there. And I'm like, yep, let's get them over to cold storage. Yep. You got to be aware these wackos are out there.
But the bureaucracy, that's kind of overwhelms you in order to maintain faith in the empire and feel like it's some sort of empire and their dollar is some sort of value, which is what you're seeing now with, they kind of pulled the curtain back, right? In 2020 with this COVID pandemic, when they ordered everybody to stay home. And yet China got to stay open and China remained open, and they're sending us all their goods. And they just sent every American like loads of money. I have so many people in my family that just like doubled or tripled their income, and they're super happy about it. But it kind of gets to people, maybe cable news isn't enough to overwhelm the population. They're starting to question like, hey, remember last year in 2019 when I had to go to work every day at McDonald's? And like, look, it had it so much better it is. So they're overwhelming us with these sort of things of like, you've got to file this report, and now we're going to start taxing unrealized gains and blah, blah, blah.
I'll tell you another country that's similar. I don't want to go on a tangent and start bashing Great Britain, but they do have a tremendous amount of administrative paperwork and bureaucracy. And people, for example, on public assistance and these types of programs, there's notorious that people with no arms or legs are asked to fill paperwork out to prove that they can't go to work and things like that. And that's what happens in when an empire collapses and there's nothing left but the civil servants and the bureaucrats.
Well, as we've pointed out in our microdose and our Twitter stream and in, of course, our Telegram group, one thing that you've seen is Janet Yellen just yapping about Bitcoin. But here's an interesting take from Kathy Wood, who is the founder and CEO of ARK. She's very well known. She's a big Tesla bull and a Bitcoin bull. But Cathie Wood, so Wall Streeter right here, institutional money right here. And here she is talking about, Janet Yellen. As chair of the Fed from February 2014 to February 2018, Yellen was on policy watch as Bitcoin soared from 1,000 to 20,000 in 2017. The fact that this week she focused on the risk of potential nefarious actors instead of the risk to the U.S. monetary sovereignty is reassuring. So she's saying the bigger threat is to the U.S. dollar. And the fact that Janet Yellen isn't mentioning that, she's instead concerned about nefarious actors about, involved with Bitcoin, even though that's debunked, right? Everything's debunked. It's all FUD. All the FUD has already been debunked many times. And we're going to get into the new FUD. But what do you think of what Cathie Wood says about this? I feel a little bit high still.
Right. Don't smoke your T-shirts. Let the kids, let that be a lesson to you. Don't make the mistake Stacy made. I saw her rolling up her shirt and inhaling it. Never do that.
Cypherpunknow.com.
Now, this Cathie Wood is premier analyst. She nailed Tesla. The ARK fund is hugely successful. It's a huge Robin Hood success story as well. People make a lot of money with it. But the point she's making there about Janet Yellen and Bitcoin is that she's saying, Janet Yellen's missing the elephant in the room here. Yeah. That Bitcoin is actually undermining the U.S. dollar. And instead, she chose to talk about it in terms of its role, even though this has been debunked. And by debunked, what I mean is that any forensic analysis of where the criminal activity gets its cash, and you see that over 99% of it comes from fiat money, from the banks, from HSBC, from JP Morgan. It's been provable, and they pay fines, happily pay fines, because it's their business model is to launder money and to fund terrorists. That Jamie Dimon has said that innumerable times. So she's right in that they're missing the big picture. I have a feeling basically that when you get to that high level of bureaucracy, you're just reading any damn script that they put in front of your face. So somebody slipped her a piece of paper that said Bitcoin is used for illicit activity. She just, repeated that ad nauseum without, I don't think she's got it. I think she's got worse cognitive impair than Biden, to tell you the truth.
Wow, that would be bad. She's also famous. Janet Yellen's famous for Bitcoin sign guy, right? Behind her with the buy Bitcoin signs. When
right,
she
and I mentioned during my famous rant in Rotterdam, or about the central bankers are the real terrorists, that I mentioned Janet Yellen. I name checked Janet as a terrorist. Yeah, baby, that's right in my video.
So Cathie Wood had been responding to somebody named Yassine Almanhandra, and that person had said that I'd be more concerned if Yellen denounced Bitcoin as a threat to monetary sovereignty. To criticize Bitcoin for facilitating criminal activity is to criticize one of its fundamental value propositions, censorship resistance. So,
she mentions it's a threat to monetary sovereignty. The price would quadruple in a day because the cat would be out of the bag. Just like when Christine Lagarde, I'm sure that a lot of people, got her on the phone and said, Christy, don't talk about Bitcoin as an escape valve because all you're doing is driving a lot of money into Bitcoin, right? So they have to learn their talking points, get your media talking, go to media training, Christine Lagarde, because you're leaking out the antithesis of what you're supposed to be saying in terms of talking points to cue your corrupt mainstream media to parrot whatever you say to propagandize the population away from this godlike money that'll save people who get on board.
And of course, the day after Janet Yellen said that Bitcoin is used by terrorists and criminals and drug dealers and stuff like that, the SEC was informed by BlackRock, which is the biggest the asset manager in the world, that they were going to open two funds. Two of their funds were going to start getting exposure to Bitcoin.
That's not chicken feed.
Through the futures market.
That's not chicken feed. That's $7 trillion. BlackRock, baby. BlackRock is the man. Turn right side up, Lucky. You're upside down there. There you go. BlackRock is the man. He got $7 trillion. Larry Fink, right? Is that Larry Fink?
Larry Fink, yeah.
Larry Fink, my man Larry Fink. I remember I met him back in '87 at a cocktail party in Harry's down in Hanover Square. We got drunk, man. He was telling me all about BlackRock and all these friends and shit. It was fucking great. That's great, Plucky. We'll call on you later.
Hey, speaking of Wall Street getting involved with Bitcoin, this is a really interesting look at some of the data about Bitcoin compared to stocks. So BTC trades for 8,760 hours per year. Stocks trade for approximately 1,750 hours per year. If BTC was a stock, this means it has been traded for 60 years. So, it's been around for a while by stock years.
I have no idea what you just said.
So BTC, you can trade Bitcoin 24/7, even on Christmas Day, even on Easter.
Right.
Wall Street opens, the opening bell is at 9:30 a.m. and it closes at 4 p.m.
Right.
So those are the only hours that you could trade your Tesla shares. So that leaves way more hours in the day that stocks do not trade, while Bitcoin is. So because of that, just like dogs live to 7 human years for every 1 year of theirs because their heart rate is higher and they're, different sort of mammal. So the same thing with Bitcoin. He's saying Bitcoin trades 8,760 hours per year versus Tesla stock. So let's look at what Cathie Wood trades. She has Bitcoin 8,760 hours per year versus Tesla trades for 1,750 hours per year. So it's almost 4 times as many, 3.5 times for Bitcoin versus
right. So a lot
stock.
of times you talk about maturity of assets, right? And saying this is a mature asset class. Let's say they introduced collateralized mortgage obligations. And you might say, well, this is an immature asset class. It's only been trading for X number of weeks or months. And we're not sure the pricing is not robust, blah, blah, blah. So I guess the point is that because Bitcoin trades 24/7, that its acceleration to become a more mature asset class is incomparable to any other asset class, because no other asset class trades like 24/7. You mentioned dogs there, of course, having faster years, lifetime than humans. I remember when I had a dog when I was a kid, we used to feed it cycle dog food. I don't know if you remember that.
Yeah,
cycle
we had
1
that
for
too.
young dogs.
Yeah.
And cycle 3 for mature dogs. And then we eventually got to cycle 5 for the dead dog. Yeah. And that didn't, you don't see it anymore because there wasn't a big market for it.
Well, I just think it's some form of findom going on whereby these regulators, seem to want to be called, told have fun staying poor. Like that's the response. It's a perfect response in a findom world whereby people want to be financially abused. They want insults hurled at them about how poor and disgusting they are. And what a horrible trader. And that's you've seen that in the early days of the memosphere of Bitcoin. The earliest memes were all around hodl, of course, was around that guy who was like afraid to keep on hodling. He was drunk and he was like afraid to hold as it fell from $1,000 down to $200. But all those pink Wojak sort of memes of like, when your portfolio is down 30% or 40%.
Great video of me at Aspen, fin-doming Peter Schiff on stage live.
Yes.
He was, I slapped him around pretty good, called him a lot of names, and, he almost came. Which was what he, is into. He's into the findom, and Bitcoin can't be abusive enough to Peter Schiff. That he's a fetishist for this type of abuse. And I'm that way to Nouriel Roubini as well. People say, why are you saying such scatological things? Why are you so abusive online? Because it's part of the equation.
They want it.
They want it. And, he's considered the number 2 Bitcoin influencer because of me. I made Peter Schiff the number 2 Bitcoin influencer. If it wasn't for me and my findom and, cellophaning, verbally speaking, virtually speaking, Peter Schiff in public, and doing whatever I needed to do, he would not get the notoriety, and we wouldn't get the exposure that we've gotten for Bitcoin, that we've been giving Bitcoin exposure globally since 2011. We've kind of tipped the world to Bitcoin starting in 2011. So these are just our drones. These are just our what does a dominatrix call her client even? What do they call the John? That's more of a prostitute, right? I mean, what do they call them? They call them slaves. Yeah. They're slaves, right? So Peter Schiff is our slave of the Bitcoin community, and he loves it. So why not? Like they said in that movie, Cool Hand Luke, he wants it, so he gets it.
Right. Well, this is a good time to throw to our guest because we did record this before this, and he did after we finished the interview. He was very curious to see what sort of metaphors and scatological sort of analogies we would come up with before and after him. Well, Andy Edstrom, this is
You've
what it was.
inspired us, Andy. You know, you're an inspirational guy. We got a super guest, author of Why Buy Bitcoin, Andy Edstrom. Welcome, Andy.
Max and Stacy, it's so great to be with you. I'm a voracious orange pill pod consumer, so it's awesome to be on the show.
Yeah, we like that. We like that. You know, you are a former banker turned Bitcoiner. So we're going to talk to you about the institutions. You come from an institutional background. So let's look at the hierarchy. First, let's look at the hierarchy of the institutions coming in. I guess we started with Paul Tudor Jones, massive hedge fund manager, well-known hedge fund manager, back in the spring, the second quarter, announcing he was into Bitcoin. Then we saw the corporations like MicroStrategy in July. Put this into the hierarchy of institutions. How important are these various institutions like the hedge funds, like the private equity, like the asset managers, like the mass mutual sort of insurance companies? What are you seeing here?
Yeah, I think they're all really important in their own ways, and they all represent huge pots of potential capital, huge piles of potential money flowing into Bitcoin. It's always been a question, I think, in the minds of a lot of people in Bitcoin, you know, how's this going to play out? Who's going to be early? Who's going to be late? Who's going to never participate? And the usual, I think, progression is, okay, the riskier pots of capital, obviously individuals were first. I mean, clearly, like, you know, cypherpunks, libertarians, anarchists were first. Then in terms of the institutions, you had the hedge funds. And then it was a question of, okay, you know, is it going to be the wealth managers, right? That's the space I live in. Is it going to be, as you said, things, guys like insurance companies and pensions? And then when is it going to be governments? The surprise for me was the corporates. Saylor was the surprise. I was not that surprised when Paul Tudor Jones came out with his bullish report. I mean, I was surprised in the sense that you're always surprised until you actually see it happen. But hedge fund, especially a macro hedge fund, that's a natural play. Likewise, Druckenmiller, you know, who came later in the year. But corporate balance sheets, that was a surprise to me. That was the factor that I had not anticipated this early in the cycle. And to be honest, the insurance companies, you know, Mass Mutual, I really didn't anticipate seeing that in 2020 either. Every one of these categories represents huge amounts of money. Obviously, the hedge funds are several billion dollars. I think the number in my head, several trillion dollars. The number in my head is about 3.2 trillion for hedge fund money in the United States. Wealth management is at least 10 trillion. The insurance companies, again, trillions and trillions of dollars, and pensions, you know, tens of trillions. So I think that the pensions are likely to be last. I mean, pensions and governments, let's say, although, as you guys have pointed out, there are foreign governments, especially through mining directly, that are effectively already getting into Bitcoin. But each of these is it's a separate category. It's sort of a separate wave upon which you can stack up the earlier waves of money flowing in. And I think you hit the major categories, but the surprise to me was Saylor and the corporates. And I think and I hope that we're going to see more of those guys coming in maybe in the first quarter here. We'll see what the numbers say.
Right. So to follow up on this, Michael Saylor over there at MicroStrategy, he put it on the balance sheet of the company. It's a cash reserve. Now, what struck me about that move is that we live in a financial universe of extraordinarily low interest rates. Some call it financial repression. And there's a lot of collusion going on. And it's easy to do because all money is fiat money. None of it's tied to anything like gold. So when you get collusion on the central bank level, as was detailed in Nomi Prince's book, Collusion, talking about the history of this and the details of this, it becomes very seductive for companies with a lot of cash to either use that cash or to borrow at these incredibly low rates and buy back their own stock. And then this makes their executive stock options go up a lot in value. So you're literally printing money. When people say that, oh, this CEO is making 5,000 times more than his workers, it's because of the executive stock options. They buy them for $1 and they cash them out for $100, and it's a cycle and it goes on and on and on. So Michael Saylor over there at MicroStrategy, he looked at that and his board looked at that. And the conclusion they came up with was that the stock buybacks scam, some may call it, is finished, because there's only so much abuse you can do to a currency before you get into a hyperinflationary collapse. And so he took a position where, you know what, I'm going to actually go into something that's even harder than gold. And I'm going to actually kind of take an adversarial position to the central banks. I'm not going to play their game. And so two things. Number one, was that a smart thing to do? And number two, am I detecting in the CEO suites out there a little split? Some of them understand what Michael Saylor is doing and are coming on board. Others are kind of defending the status quo and putting some FUD out there. What do you see?
Yeah, in one respect, I think it's something you've been living with, Max and Stacy, for a long time, which is number goes up after someone makes a move, and those who weren't participating, they look at it and they're kind of shocked and they think, I missed it, or I should have been smart enough to get in earlier. And I hate to be, not only just not the first mover, the second mover, but like the fifth or sixth. So, and by the way, as you know, corporate CEOs have very high opinions of their own intellects. They don't like to be shown that they missed something or that they're stupid, basically. And so I'm sure there's some of that going on. The second thing is, I think there's probably going to be more of a bifurcation, this is my guess, between highly valued companies and less highly valued companies that make the move. So as you know, what we saw in the prior cycle was, I always think of Long Island blockchain, right? I think of companies that maybe their core business wasn't doing so great, and they pivoted into at the time, crypto. And maybe this time it's just Bitcoin, because Bitcoin is so obviously dominant. And so I think you have the same thing with companies. If you have, and this gets into sort of the speculation about Tesla and Elon Musk, like, would Tesla buy Bitcoin? I don't know, maybe, but the problem is his valuation is so high that I don't want to say there's only downside, but let's just say it would be a lot to put at risk to even take any chances that, I don't know, the SEC or some other agency would frown upon this move. It's not as risky of a move if your core business is valued at 5 times earnings versus 100 times or 200 times earnings. So I do think that the willingness to roll the dice from a corporate perspective is probably going to correlate to, how's the valuation looking? How happy are my investors already at the moment versus, do I got nothing to lose, basically, in making this bet? So those are some thoughts. And then I would temper that, of course, with, okay, but also then if you have a natural bent toward tech, or you're already adjacent to the space, like this is obvious with Square, right? Like, of course, Square made a small move. They were already selling the stuff. So that makes perfect sense. So there'll be some exceptions in that regard. But my best guess would be that we're going to see somewhat of a bifurcation between really highly valued companies that have a lot to lose in terms of investor perception. They may be more hesitant versus companies that are willing to roll the dice because they don't have that much to lose.
Right. So I have a kind of long question here as well. And that is that there's no bigger investment asset manager than BlackRock. And they've just announced that they filed with the SEC that they have 2 funds that they want to get exposure to Bitcoin futures. That is obviously a huge institution, but BlackRock also is very influential with the Biden administration. So uniquely so, there's usually one bank at the fore of every single administration, and BlackRock is one of those for the Biden administration. But the other big player in this whole space, you have to say, is Grayscale. It's just pretty staggering. Now, prior to Christmas, JP Morgan came out with a report seeing that Bitcoin could possibly go to $650,000. They were the most bullish of almost all Bitcoin calls. And the reason in particular, they said, is that the $1 billion a month at that time coming in from Grayscale was like momentum traders couldn't trade against that. Now Grayscale is like doing $1 billion every 3 or 4 days. It's insane. On Monday, they bought 18 days of supply, i.e. 16,000, over 16,000 Bitcoin. Wednesday, they bought 9,000, nearly 9,000. That's 27 days supply in 3 days. Are we going to run out of Bitcoin for all these institutions?
Yeah, you have to say that just the fact that, as you said, Grayscale, plus PayPal, maybe plus one or two others are taken down more than the 900 coins a day that are getting created, that are getting minted. You have to say that looks like a supply demand imbalance. We never know when perception or sentiment, is going to shift, because obviously it's not like the rest of the hodls or the hodlers are completely static. I mean, people, big whales, investors, people from various parts, even wealth managers, arguably, they're going to have this notion of, I got my core position, but maybe I want to trade around it. So, if I see that the price is slipping or that we've moved too fast, maybe I'm going to cut back a little. So I wish it were as simple as just saying, this massive wall of money is going to come in all at the same time. I think that's actually right. I think you're right on that in sort of the medium term. So if I'm thinking about 2021 and what is it going to look like, I do think that's likely to be the overarching theme. And then maybe I graft onto that, some short-term volatility as people say, have we gone too far too fast, or have we not had a correction as we usually do? And so that you'll see that noise basically as we go. And of course, the fudsters and the naysayers will say, it's Bitcoin is so volatile and it's down, 25%. And I told you so for the 1500th time. But as we know, that group, that constant massing of institutional money plus institutional knowledge, as people learn about this, as the institutions finally get around to doing their homework, they're likely, in my opinion, to be a, let's say, medium-term steady bid.
Right. Guggenheim, they came out not too long ago with a $400,000 per coin projection. They are eligible to start accumulating this position on January 31st, as I understand it. Just in the last couple of days, the head of this group came out and said, well, he thinks you could see a pullback to 20,000 now. My question is, to what degree would this qualify as FUD?
Yeah. So Scott Minerd of Guggenheim is one of the best known macro names on the street. He's been around for a long time. Guggenheim manages, I don't know, something like $300 to $400 billion. They're pretty sizable shop. And yeah, I will never forget that Bloomberg interview where they literally stopped. They were going to cut to the Fed news, right? And they didn't cut to the Fed news because the interviewer said, wait, what did you just say, Scott Meyer? Did you just say $400,000 a coin? I was paying attention too, because 400,000 is the number I've got in my book. So that was some validation. But yeah, as you said, so then he piled on some FUD. Yeah, I think that I sort of wonder if in Scott's head, he wanted to be on record at that moment in time with 400K so that he could look right. There must have been a conflict. He must have had an angel on one shoulder and a devil on the other. One side saying, don't talk it up because you got to accumulate this thing. But on the other hand, I really want to be right and on the record. And, I want people to think that I made a good call back in 2020, fast forwarding a year or two or a few years when we actually hit the target. So, I suspect that he wants to buy it cheaper at this point. Maybe he realizes that talking it up so aggressively last month was a mistake. And so maybe took the opportunity to try and get a little reversal here so that he gets a better price for his clients. I hope that's true, because as a fiduciary, that's what he ought to do. Although then you have to think about, is that manipulation? But who
Right, of
knows?
course. You have to give that consideration. And we've seen in the last few years a lot of folks go on financial news and openly manipulate stock prices, especially in the hedge fund community. The whole Amway kind of debacle was clearly using the media to move prices around. But talking about Michael Saylor for a second, his comprehension, his due diligence, his background as an engineer seems to set him apart from everybody else, including the Scott Minards out there who are considered pretty smart. And one thing that Saylor said recently on a podcast was that when one of these money managers tried to talk to him about their particular model or their particular regression model, et cetera, he, got very animated and said, look, none of your models work. Bitcoin doesn't obey any models. It's completely unique and on its own kind of trajectory. What do you think about that?
So I constantly battle in my own mind with this question of, will this cycle be the same like every other cycle in Bitcoin, right? Around the 4-year halving timeline, or will it reach escape velocity? Will this time be different? I believe that it will be different in the long term. And as to whether this is the escape velocity cycle, I just don't know. I think in probabilities, I can assign, pick a number, 20%, 30% probability that it just goes to the moon in this cycle. My base case is still that we see another cycle, and that momentum models like the one you're referring to, at least I think that's the one that you're referring to, are likely to repeat. But I wish I knew. I wish I knew, Stacy. I wish I knew, Max.
Right. You talked about Scott Minard calling 400,000 on Bloomberg, I think it was, or CNBC, and they stopped and they were like, we're not going to cut to the Fed. Well, former Fed chairwoman Janet Yellen is making her way to the Treasury. Now, I want to ask about this, because one thing you could see during this financial crisis led by the pandemic, caused by the pandemic response, is that anytime the Fed, but especially the Treasury, tries to do anything, Bitcoin goes ballistic. Bitcoin responds. So it seems like that's naturally going to be a conflict that hinders the ability of the Congress to print a bunch of money. Biden wants to print another $1.9 trillion, for example, on top of the $900 billion that they printed in December. And that's real money. That's not the Fed's QE. This is like real money going into the economy. What do you see about that situation? The fact that basically Bitcoin is revealing what they're actually doing.
Yeah. Bitcoin is that beautiful barometer of central bank and government profligacy, right? It is, it doesn't lie. People get confused because it's volatile. At least the price in dollars and euros and yen and fiat currencies is volatile, but it tells the truth. It is the mirror reflecting back on this broken fiat money system, fiat currency system. And so, yeah, I think that the more printing we see, and especially as you pointed out, Stacy, the more checks actually going into people's hands. It's one thing to do QE and buy bonds and jack up stock prices and real estate prices. It's another thing to actually get checks into people's hands that are more likely to spend the money. And my view is that Bitcoin is the best single barometer of what's really going on with the central banking fiasco system.
Right. So, back in the 80s, we used to talk about the bond vigilantes. During the Clinton years, remember, Hillary Clinton suggested universal health care. The bond vigilantes crashed the bond market. This is 1993. And Robert Rubin was active and trying to make the point that the economy couldn't take on all this extra debt. And then the bond vigilantes were expunged with quantitative easing, and the central bank simply bought all those bonds. We don't hear about bond vigilantes anymore. We used to have gold vigilantes, and then in 2008, during the global financial crisis, they were taken out back and shot. in that for every ounce of gold out there, there's something like 50,000 ounces of paper gold, something incredible. So there's been completely financialized and there's no price discovery whatsoever. Okay. Is Bitcoin the vigilante that can't be killed by the central planners? That's the question. Certainly in the last few days with the price break from 42,000 down to the low 30,000s. And when guys like Scott Minard coming out and jawboning on financial press, it smells like the old derivatives game. Andy, where are we on this bit?
Yeah. Now, I love that little history you gave of the, the bond vigilantes and the gold vigilantes. I always love that quote from James Carville about how if he were to die, he'd like to come back as the bond market because then he'd be in charge. Too bad that was wrong. Yes, you mentioned Bitcoin. Is Bitcoin finally the true vigilante? I think it might be in part because of the volatility you just mentioned. Good luck levering up, right, and piling lots of debt onto Bitcoin. Because if you are levered long, if you try to hypothecate too many times, write too many, paper or electronic claims against that hard Bitcoin collateral, you stand a good chance of getting destroyed, of getting liquidated. We saw it happen in March of last year. Several well-known Bitcoiners who were running funds or constructs that were levered, basically got taken to the cleaners, got taken out back to the shed. And I think actually Bitcoin's volatility in that regard really is the friend of anyone who thinks that it could be captured, it could be over levered, it could turn into this, rehypothecation and manipulation nightmare that we've seen with the bond market and the gold market. Now, as to your question about, has it been manipulated, by, I don't know, futures speculators or option speculators in this last downturn? I don't know. Every time it happens, every time we get a 25, 30% correction, people crow about market manipulation. Maybe it's possible. Does it matter? I don't know. Do I care? Not especially. It seems like it's just Bitcoin doing what Bitcoin does. And early in my journey and in my learnings about Bitcoin, I thought that the volatility was a bug. And I've definitely come around to the view that the volatility is a feature.
Yeah, that's a great point. Just looking at the gold market for a second. So we know there's a lot of gold collusion. We know there's a lot of manipulation of gold. And gold is let's call it an $11 trillion asset. And it's the second most traded commodity in the world. And there are natural buyers of gold all the time. And there's a natural bias of gold on the upside due to all the money printing and people trying to seek a safe haven. And for the central banks, it's a very easy game to clip little 2 and 3% gains here and there, collude, bank those gains. And on an annualized basis, they're making, 30% a year. But the difference with Bitcoin, and I just want to emphasize this point, is that on any given day, the price could gap up 100% or 200% because compared to gold, it's not even, it's 600 billion versus 11 trillion. So if it's going to seek parity with gold, it's got a lot on the upside. So one of these central banks, you can't corral them all to collude because one of them is going to break ranks, particularly in a deglobalized world that we're in now, with a very hostile world that we're in now, with China breaking away and these countries separating. So these central banks, one of them is going to break the cartel. And just, I asked this question a lot, just to speculate, of the central banks out there that are all colluding right now, we know it. But which one do you think is poised to break the cartel and say, you know what, we're going to go long Bitcoin and we're going to be the first in, and we're going to make a quick 100% on our capital, and you guys can go pound sand? What country do you think has the balls to do that?
Yeah, there's a few ways to frame that. And I mean, you guys have been on top of thinking about how, let's say, quote unquote, governments, are getting involved, mostly probably through mining, fostering mining operations, maybe semi-controlling them, taxing them, et cetera. So does some of that flow to the local central bank? Very possibly. If you're talking about just outright purchases, one place that comes to mind for me is Japan. Japan knows it has an enormous debt problem. Japan has historically been pretty favorable toward toward Bitcoin in general. I mean, it's gone in fits and starts, and it sort of ebbs and flows. It's got a very tech savvy population, and it also has an interesting geopolitical predicament, let's say, given where it's located in Asia. So in terms of large central banks, that's a potential obvious one for me. Now, the last thing I'll say too is a bank like Japan, or in a country like Japan, is likely to have relatively good controls on basically managing the coins, right? Because obviously, on the other hand, I think about, well, maybe it'll be a small country, right? Because basically, what do they got to lose? The problem with some of the small countries, especially developing countries, is they're less likely to have strong controls on handling those coins, right? Number one. And number two, if there are regimes that are, let's say, out of favor with the powers that be in the West, then what are they going to do? Are they going to actually entrust, a U.S. based custodian with holding their coins for them? I don't know. Seems kind of doubtful. You could see a replay of what happened with Venezuela and them attempting to collect their gold right from the vaults in London, which didn't work out so well for them. So those are a few ideas. We'll see. I mean, I can make a case for small countries that got nothing to lose. I can make a case for large countries that have been relatively friendly to Bitcoin and have sort of a debt-based, let's say, a financial reason to do it and or a geopolitical reason. And the good news is we don't have to know in advance. As you pointed out, all it takes is one. All it takes is one, and then the trickle comes, and then the flood. So I'd love to gamble and speculate on who it's going to be, but the genius of the game theory in Bitcoin is I don't have to know.
Right. So I wanted to follow up with this in that we've talked about the bond vigilantes and the gold vigilantes, and now we have Bitcoin. So those are our three layer one monies, right? Gold, US treasuries, and Bitcoin. Do you think what we're seeing at the moment, the US has the global reserve currency, which is also the unit of account and the settlement layer. Do you think we're witnessing the beginning of the end of that because of the weaponization? We've seen Germany now and France starting to work on an alternative to the SWIFT system. But like when I look at the stock markets and Warren Buffett, classic, hedge fund billionaire, investor dude, he always looks at the markets and says, if it's 100% of market cap to GDP, it's probably in a bubble. Well, when Biden took office, it was 190%. People look at hyperinflation and expect something like Weimar Germany. But are we seeing the hyperinflation much more controlled and targeted than was, we didn't have advanced like central banks back in Weimar Germany to control like where the money went. Like, is that where all of the hyperinflation is going? Is this the beginning? Are these the sort of signs we see that maybe there's some vulnerability or instability in the dollar?
Yeah, this, Stacy, is the, quadrillion dollar question, right? For investors right now. It is, what is inflation? And I'll just leave aside, the technical definition. I don't really want to get into that morass at the moment. But the question is, generally speaking, when might we see inflation in a significant way, such that investors have their oh shit moment, such that they realize, it doesn't make a lot of sense for me to own this stock at 40 or 50 times earnings. It's all great. There's that sweet spot, as you know, from historical inflations where the inflation is building, but people don't know it, or they're in denial, or it hasn't reached that tipping point among the investor population, the population in general. And that's the biggest thing that scares me as an investor, as a wealth manager, is I worry about that bond component of the portfolio. The position I've taken personally and professionally is got to own hard money assets. And Bitcoin is the hardest money asset there is. Gold has been the favored hard money asset in the past. Gold may do fine as an investment, for the next few years. I don't know. It might or it might not. The might not case will be where Bitcoin totally eats its lunch. And so that's that at a minimum is why you got to own Bitcoin as an investor, as anyone managing a portfolio. And so, yeah, I really worry about what you just described, which is the pot slowly boiling? Are we the frogs and we haven't noticed it? And everybody thinks they can hop out of the pot in time before the problems emerge. And as we know, when the whole crowd tries to fit through that small door at the same time, we can run into problems.
Right. The last big bond crash we had was in '93, as mentioned, and we've been clear sailing ever since. But once it gets rolling, it is hard to find the exit. Now, recently, with the introduction of negative interest rates, I thought I had seen the stupidest thing ever, but I may have just heard something even dumber. Janet Yellen wants to tax unrealized gains. Your thoughts?
Yeah. So I'm sad to say, Max, that I've been preparing my clients for this for years. I've been preparing them for the possibility of a quote unquote wealth tax. And as you know, unfortunately, that already exists with real estate, right? Property tax has been around in this country, in the United States, for a long time. Now, granted, wealth tax on investments, it was tried in France, I remember a few years ago. They reversed it. It was kind of a disaster. These are the things we're gonna see. We're gonna see the state encroaching more and more on assets, on income. Basically that long, strong arm of the government is going to keep reaching deeper and deeper if we let it. And so, will I be surprised to see a wealth tax? No, I won't be at all surprised to see a wealth tax. I think that governments will, as governments always do, as they're doing with the monetary policy now, they move a little farther and they look around and the system doesn't blow up. So, of course, they assume, well, I can go a little bit farther. And of course, it's accelerating. It's now exponential in terms of the rate of the money printing. But yeah, I think the governments are going to try bizarre things. Basically, it's almost inevitable that they will push and push and push until they blow up the system, because unless and until they blow up the system, they're just going to assume that they can do even more.
Right. And you see the wealthy fleeing high tax states like New York and California, and they're all heading to Texas and Florida. So in a way, they're preparing themselves that way, is at least, okay, taxes are going to go up. They see that. Their advisors are telling them this. They're leaving 10% tax in New York State and then another like 4% in Manhattan, and they're going to Miami, right? Because they're like, well, okay, if my federal taxes go up by 15-20%, at least like I'm not paying a state tax as well. But speaking of New York, you also have New York Times columnist Paul Krugman, who was out on Twitter this week mocking anybody who has any concern about all this debt that is being printed in order to rescue the economy. Well, he said, we don't need to pay back this debt anyway. We could have, these are perpetual bonds. We don't have to ever pay them back, and inflation will eat it away. So but that's the mindset of a lot of people, especially on the left, or whatever, the Democrats. And they feel like we don't really need to pay this back, and we could start doing MMT and UBI and things like that. So that seems to have changed. The mindset of a certain part of the population has changed watching, I guess, since 2008 and the financial crash. Is like, we can print up money and people keep on sending us free goods from around the world. So why not do it for the people?
That's right. Isn't it amazing how the human mind works? I'll never forget Krugman. I quote him in my book, of course, and the quote I use is, the internet will never amount to more than the fax machine. That's the classic. But then the other one is the classic is the tweet, debt is money we owe ourselves. Who is the we? Yes, it's amazing how, I don't know if these guys don't study history or if their egos are just so inflated, because they win Nobel Prizes, or they just get this social feedback from people in power who see how great it's going because the printing of money jacks up the value of assets. And so they get richer and richer, at least in paper terms. You have to scratch your head and wonder how these guys reach these conclusions that, the law of gravity doesn't apply. This time is different. This time we can cleverly manage the money printing so we get just enough inflation, to manage that debt burden. We'll only get 5.5% annualized inflation, and that'll be enough to reduce the real, purchasing power adjusted burden of the debt, over a period of the next 2 decades, and we're going to manage it, exactly to the tiniest smidgen, the lowest or the narrowest measurement. And it's just ridiculous. This is not how human psychology works. People are herd animals. We're social animals. This is the other, thing that gets me is the discussion of velocity of money, right? Oh, they print more money, but the velocity goes down, so it's fine. And the Austrians tell us that, velocity is about how much of my money do I spend and how much do I hoard and do I save for a rainy day? And as soon as the population realizes that hoard that I'm saving for a rainy day is effectively depreciating, as Saylor says, at, 15% a year plus, then I don't want to hold it anymore. So the velocity of my hoarded money goes from 0 to infinite in the blink of an eye. And so there's no using averages on velocity. There's no using averages on people's, propensity to hold this stuff. It can turn on a dime. And if they take it far enough, which they seem to be doing, then it will.
Right. And it's provably wrong, the whole conceit that money we owe ourselves. As Stacy tweeted this week, the goal of stimulating the economy with money printing is an oxymoron, because the second you have any kind of recovery, you do then, therefore, by definition, need to raise rates. And therefore, you would immediately go bankrupt. Right. So the goal is not to recover. The goal is not to grow. The goal is to propagandize the population with this very basic lie that was really invented probably by John Law, 300 years ago. And he was the first to try this, and it bankrupted France entirely. And the same thing will happen. So Paul Krugman is the John Law of the 21st century, and provably so. There's nothing he's saying that wasn't done with catastrophic results.
Right. Because Max, like that tweet I had sent was because Janet Yellen was questioned in testimony in Congress or the Senate. And she said that, don't worry about the debt because interest rates are so low. I'll keep an eye on it if the economy starts to recover. And I'm like, yeah, that's a problem, right? Because interest rates are so low because the Fed is buying all the debt, but also because the economy is so horrible. So, that suggests that you can't allow the economy to recover, because then interest rates go up and then all that debt disappears. And the other thing is we're relying on the Chinese not noticing this game because they keep on sending us goods, right? And we're hoping that they don't notice that we're all getting free money and getting to sit at home all day while their people have to go work and slave over, an iPhone to send to us. And we're like, well, as long as they're happy with receiving these dollars, we're okay.
And they're no fools, right? When you look at the data, you look at the central bank in China, they have been reducing their holdings of treasury securities significantly, right? Like by a lot, I think it's hundreds of billions now. I mean, their total reserves were a few trillion. I want to say it was 3 trillion and change. And, the majority of that was US dollar denominated. And we've seen those reserves fall. I think the same is true of Russia. Russia, of course, has been buying gold. We don't know yet if they've been buying Bitcoin, although it wouldn't be a surprise. We do know that there's significant mining activity in Russia. So at least they had that domestic Bitcoin production capacity, as an effective partial hedge. And of course, China has that as well. But yeah, it's all unraveling before our very eyes. I only wish I knew the timing. I used to say everybody's always been early on this stuff, right? At least the naysayers and the hawks and the people who say that the monetary system, the fiat dollar-based system, is gonna fall apart. There were those that were saying it would happen in 2009. After that unwind, there were those that were saying it would happen this year in March, when the treasury market actually did puke, right? That was the oh shit moment for the Fed. That's when the treasury market fell out of bed, they realized, oh my God, the system really is going down again. So we better print more money and buy it all up. And at least we had this deflationary impulse because people panicked. They started hoarding, dollars because they thought they were going to lose their jobs. Many did lose their jobs and their livelihoods. And so, but once we get past that, once we work through that, you have to ask yourself, how much longer can they keep up the charade? Can they go another decade? I kind of don't think so. Could it go another 5 years? Maybe. It's possible, but only time will tell.
Yeah, okay. Well, the name of the book is Why Buy Bitcoin. I see it in the lower left-hand corner of the screen. That is what it looks like. I take it it's available online. People can buy it right away. People I know that read this book say it's the best book they've ever read that answers the question, why buy Bitcoin? It answers that question. If you have that question, this is the answer to that question, right?
Well, people in our Telegram group always ask that. They feel like, why should I buy Bitcoin at $30,000? Right. So, they feel like they're too late. So I'm assuming you feel like it's as Christine Lagarde said, in a negative way, she said it's an exit valve. Maybe you want that exit valve in this situation.
Yeah, that's right. I still believe there's multiple orders of magnitude of upside potential to Bitcoin. So are you late? No, if you don't have a position, you better get off zero. And, after that, you can save and accumulate over time. But zero is the wrong number.
Well, that was a really great interview with Andy Edstrom. I hope you learned a lot. I'm sure the audience for the Orange Pill podcast is going to go out and buy his book, Why Buy Bitcoin?
They should. And they should give it as gifts to everyone they possibly can because it answers the question, why buy Bitcoin? The name of the book is Why Buy Bitcoin? You see the way that works? It works out in a Cartesian, elegant, philosophical kind of aesthetic beauty rarely seen in such an affordable book. And I believe the price is very, very affordable. Even Peter Schiff can buy a copy.
Well, even prices. Peter Schiff can have fun saying poor buying if he doesn't buy it. But I want to point out that, we mentioned the unrealized tax, the unrealized gains tax that they're introducing. And again, at the top of the show, I was saying that the U.S. empire and the imperial nations, they often do this as their own grasp on power disintegrates and the barbarians start coming in. And the barbarians would include like Bitcoiners, for example, like when their authority starts to collapse, they'll often come up with like elaborate schemes to try to maintain some sort of faith in their institutions that has disintegrated. So I think this is part of that. I think this is why they want to start taxing unrealized gains, is like that. They want to shut off that exit valve. I think Christine Lagarde is the one that accidentally let that slip of this exit valve. And they see that you can exit their system, and go to the land of the barbarians, because Vijay Boyapati, who we interviewed on Keiser Report before, he says that unrealized gains tax is basically a wealth tax in a world where the only asset that is not taxed is dollars, which won't get taxed, but will get continually debased. So no matter how you store your wealth, it is extracted by the state. So the state is saying you could have you can put $2, $3, $4, $5 million in your bank account. We're not going to tax that. We're not going to apply an unrealized gains tax on that. But we will steal it because we get to steal it through inflation. But should you put it in Tesla? All you Tesla people out there on your Robinhood apps, wait until you find out when she starts taxing you in order to basically shake those assets out of your hands and into the super wealthy who don't pay taxes. Like the private equity and hedge fund guys don't pay taxes because they have all sorts of elaborate schemes to avoid ever having to pay taxes. So they won't have to. It will be just applied to individuals. There will be, of course, an exception for funds and things like that.
Right, like hedge funds don't have to pay taxes, except very minimally. But I wonder, listening to you, and I'm thinking, I wonder what's going to happen to Puerto Rico, because they already have an incredibly advantageous tax regime where gains are not taxed already. And if you see a mass migration, particularly in the Bitcoin space, beyond we've already seen into Puerto Rico, I wonder if they're going to even allow that to continue.
Well, the plan for the Democrats is what they want to do is make Puerto Rico a state, because they assume that for the rest of eternity, Latino people will be Democratic voters. So they're assuming that this will give them a permanent, just like we have perpetual debt, we have permanent UBI, permanent QE. Well, this will be a permanent Democratic majority, so that we could always be, like funding this debt that we only owe to ourselves, as Andy Edstrom pointed out, that Paul Krugman had said. But again, why buy Bitcoin? There is another data point coming out this week. And, we had the FUD about this double spend, which was total misinformation. But this is not misinformation. This you could see. Supply shortage incoming. 270,000 Bitcoin off the market this month. So 270,000 Bitcoin was moved off of the exchanges and into, private wallets, cold storage.
Yeah, it's a huge movement, and the price is not really telling you some of these underlying seismic shifts in this marketplace. The price has made a big move, obviously, to 42,000, and it's consolidating those gains. And meanwhile, during that consolidation phase, coins are disappearing from the exchanges. Corporations are putting more into their cold wallets. Barry Silbert's adding, I think he's got 3% of all the Bitcoin that'll ever be now over their digital currency group. You've got Blackstone is involved, and Mass Mutual, the insurance company, and Michael Saylor, I'm sure, is still eyeballing some more Bitcoin to buy. Paul Tudor Jones, I believe, will come out with an announcement saying, hey, we went from 1% to whatever, 5-10% in Bitcoin. And all these things are happening. The government is fighting a rearguard action in terms of every trick and every stop they'll pull to try to save the dollar from collapse. But it's too little, too late. As Christine Lagarde has said, Bitcoin is the escape valve out of the system. And there are thousands of billionaires, many hundreds of decabillionaires, and a few, even beyond that. So those folks are very mobile. Bitcoin is easy to put. You could put $100 billion into Bitcoin pretty easily, memorize the seed phrase, and go anywhere in the world on your yacht and tell Janet Yellen to go, fuck herself. And there's not much she's going to be able to do about it. And then there's something like 25 million millionaires around the world.
There are 42 or 48 million millionaires. And I know swanbitcoin.com is always talking about this and tweeting about this. And there's, of course, only 21 million Bitcoin. And that includes the 1 million that Satoshi allegedly has. And so that won't ever move. But, the thing is that you see a lot of FUD popping up around the space. And I think you were, there was a good point with the interview with Andy Edstrom, is that Scott Minerd from Guggenheim, I think, when he came out in the third quarter, I think it was like maybe in October or something, that he said that, Bitcoin was going to 400,000. Remember, at that time, Bitcoin was only like 10,000 or 9,000. So I don't think he expected it to go up to 42,000 so soon, because he doesn't have permission to buy the Bitcoin until January 31st. So I think he probably sat there like as we were saying in the front half, like the findom situation. He felt like he was being abused and he wasn't getting paid. Like he wasn't getting paid for it.
Yeah. Michael Saylor was very careful to stage his purchases and without moving the markets, really. This guy, like a complete jackass, just stumbled into the circus and told everybody with a big target on his back that I'm addicted to findom, please piss on me. And so everyone started pissing on him, and he got the golden shower of the century. And now he's trying to walk it back, saying, no, it's going to go to 20,000. Please, I'm begging you. I fucked up. Don't make this go to 400,000 before the end of the month.
Well, I could see that he might want it to have gone up closer to 20,000 because, right, back when Bitcoin was in the $9,000 range, we were talking about that there's a wall of institutional money that's coming in at 20,000. And he, as an institutional money guy, wants it to be closer to where all his colleagues are also going to be getting in, because he needs to sell his these guys have to think like that. Like, who am I going to sell my Bitcoin to when I need to exit for my clients, right? So he probably wanted it higher, but probably didn't know that it was going to take on a life force of its own, and all these other institutions were going to come in, and that it would hit 42,000.
Well, it speaks to the game theory on the central bank level that we were saying. The cartel and the central banks is fine when it comes to gold manipulation.
Yeah.
Because the upside on gold is never going to be more than 5%, before.
Plus, they hold all the gold, so they don't care. Like, they own the most gold other than the women of India. But, pretty much the central banks own it all.
Yeah. And gold's never going to double in a day, but Bitcoin could.
Yeah.
So you're not going to, if you're part of that cartel and you decide, you know what, the game theory here is that I am first to break away from the pack, could be Bank of Japan, and go into Bitcoin, and I'm going to be ahead of everybody and make a quick triple. I need to do that to survive because all the fiat money is crashing.
And then you mentioned in the Andy Edstrom interview, you mentioned that tweet I had sent about Janet Yellen's testimony. And I want to read it to you now because I think it's important to understand what the situation is. Because remember, Janet Yellen used to be at the Fed, and the Fed's mandate is what? Price stability and employment, they say, right? But what you could see over the years, what they really, really, really fear is wages rising ever. They don't want the ordinary schmuck to their wages to ever rise, because that's the only inflation they care about, because they represent the banks and the elite, right? So they don't want wages to ever rise. And by God, they succeeded in making sure wages never rose since 1971. So they've been declining since 1971. Good job, Janet Yellen. Now she's at the Treasury. And here is what she's saying about the economy. So she's supposed to be looking over for the overall economy, not just the bankers, right? Now she's at the Treasury. Well, she said, neither the president-elect nor I propose this relief package, the $1.9 trillion one, without an appreciation for the country's debt burden. But right now, with interest rates at historic lows, the smartest thing we can do is act big. She said, even though the amount of debt relative to the economy has risen, the interest burden, the amount the Treasury pays to service its debt, has not, due to lower interest rates. She said she will watch that metric closely as the economy recovers. So you see there, she said, like, yes, the debt bubble is huge, but it's fine as long as interest rates never go up again. And she's identifying if the economy recovers, the interest rates will rise. So, like, they're more concerned. Institutions are always more concerned about survival, right? That's in their DNA. They want to keep on surviving. They overload you with more and more bureaucracy. That's what happens after decades of an institution being alive. They need to create reasons to maintain their existence. So this is the same thing with this institution here, is they need to keep that bubble from blowing up, because if that bubble blows up and goes to zero, then you don't need them to keep this bubble alive, because they're like, if the economy ever recovers, we're all going to die. So we better.
Right. They're suicide bankers.
Yeah.
They're like, if you don't let us to continue to keep these insolvent banks alive by printing money, I'm going to pull the pin on this grenade, blow myself up, and blow everyone else up in this room, and blow up the economy. They're suicide bankers. That is the Rosetta Stone of Fed speak right there. It reveals so much.
And this is Treasury speak working with the Fed. The Fed is buying the Treasury debt. Like, the Treasury, remember, that's what Nick Bhatia was saying. Like, the Treasuries, that's the market that Bitcoin is after. Treasuries, gold, Bitcoin. Those are layer one. Those are the only 3 layer one monies in the world. The Fed can just issue credit. It's not money. It's nothing. That can melt down and nobody would notice it. The Treasury printing all this money, that could melt down the system. And that the debt they're issuing in our names, that could blow up the system, because,
Yeah, absolutely. And this is a paradox that is often said by top high-level bankers. Trump would always say, like, the economy is doing great, That's why we need to keep rates low. Okay, now that's an oxymoron, because if the economy is doing great, then by definition, in a free market capitalist society that has a central bank as its anchor, that's when you raise rates. So if the economy is doing great, that means rates should start going up. But since rates are going down, the words "the economy is doing great" are patently false, and demonstrably so. So Janet Yellen is saying, like, well, the recovery is coming on track, but we need to keep rates low. So that, again, is an oxymoron. She's saying that there is going to be no recovery, and we have no visibility for any recovery in the foreseeable future or the extended future, but we're in a trap where we must keep rates as low as possible, or we're going to go down like the Titanic.
Well, this is kind of like a findom thing, because think about it. Look at when markets react really positively. When markets go up 6 or 7%, even these like giant markets, like it's easy for Bitcoin to go up 5 or 6 or 7% in a day, because it's not even $1 trillion market. But when a stock market, which is trillions of dollars, is 190% of US GDP, right? When that moves up 5 or 6%, always on, never on good news. It's always on bad news. So it's like a findom thing. It loves bad news. It loves talk dirty to me, talk economic collapse, talk wages collapsing, talk massive unemployment. Oh my God, I love that. Oh my God, that is awesome. And the markets soar because they know that this whole charade will continue for yet another quarter. That's all they care about at the end of the quarter.
Right. If Main Street were to suddenly start doing well and wages started going up, the bond market would instantly collapse, rates would be a lot higher, and the stock market would go down 90%. But of course, nobody who owns a lot of stocks, and that would be the top 10% of the country, but specifically the top 1% and specifically the top 1/10 of 1%, don't want that to happen. Then they put into place their puppet at the Treasury or the Fed, and they speak these points of academia that they learn at Harvard and Yale and Princeton. Is taught to them as they are doctors of economics, and they're indoctrinated in financial terrorism. And they speak in this way before they pull the pin on the suicide vest and kill everybody. And so if you don't want to get in the way of the blast zone of these psychopaths, then you need to get Bitcoin and get as far away from these fucking dimwits as you possibly can.
Or, in these last words here, Max's findom t-shirt there. What does it say?
Have fun staying poor.
Have fun staying poor. Like, that's that we've already established. We have the Fed and we have the Treasury, the two institutions around our monetary policy and fiscal policy, right? This is our whole economy around us, as these two institutions are supposed to guide it. Well, the Fed wants to make sure wages never go up. And now the Treasury has to make sure that the economy never recovers, because the Treasury only cares about itself and the continuation of itself and the swamp and the elite. And so they need to make sure that they never have to pay more than 0.05% on their treasuries. So these are the two institutions that want you to have fun staying poor. That's what they say every day. Have fun staying poor. That's what they say to you.
Yeah, the GDP in real terms is shrinking rapidly. And you see that in the stock market. It's not necessarily that the stock market's rising against the GDP so much as that the GDP in real terms is actually shrinking quite rapidly, because the multiplier effect by printing all this money is approaching absolute zero. And then once you have nothing but debt monetization, and once the interest on the debt is higher than the taxes you're collecting at the call it the $3 trillion threshold, then you are officially in Venezuela Bolivar land.
This is so hot.
The street is completely littered
is the total
with
findom.
Paper money.
Max is such a findom.
Now you know the key of our relationship. I'm getting so hot and bothered right now. I can't believe it. Let's continue this off air.
This is how we talk to
see
each
where
other.
this heads. See where this is going. I have a feeling I know where it's heading. I'm loving it.
He pushes in wheelbarrows full of bolivars and Zimbabwe dollars, and he's like turned on by it all. Like, this is total findom.
Jesus.
Right. Well, I think
is that why we keep doing this show for 11 years? I get it.
Right. Well, thank you for joining us. And of course, I'm going to give this to you for free,
I have to
okay?
adjust myself.
I'm going to give you this shoe for free. Watch this. All you have to do is go smash that like, and I'm going to abuse you with this shoe for free. Listen. Smash that like. Smash it.
I'll have what she's having.